You don't make $2.26 million by accident. That's this year alone. We're only 3 quarters in, and no, it wasn't some lucky trade. It wasn't timing, it wasn't hype, it was execution. Same system, same process, bigger numbers. Last year I made just over $1 million. People said it was a fluke. That's cute. Try doing it 2 years in a row. The truth is simple. Most people fail because they don't do the boring stuff long enough to win. This is what happens when you stop guessing and start following a process that actually works. Most people won't do that, but if you do, the outcome isn't surprising, it's inevitable. Let's cover why I'm still biased towards tech stocks. I'm unapologetically bullish on tech. Why? Because tech compounds. Every industry is shifting towards AI, automation, and cloud. Healthcare, finance, energy, defense, they're all running on tech. And when you're betting on growth, you don't want safe, you want leverage. And here's the hard, cold truth. Most investors fail because they diversify into mediocrity. They spread themselves thin across companies that will never move the needle. I'd rather double down on the sectors reshaping the future. Tech isn't a trend, it's the operating system of everything. So if you want slow, steady, and predictable, go buy bonds. If you want extraordinary upside, you need technology. Why NVIDIA is still a kingmaker. NVIDIA isn't just winning, it's building the battlefield and charging everyone rent. In 2024, NVIDIA took over the AI GPU market. In 2025, it's still in control. You want to run AI at scale? You pay NVIDIA. That's not hype, that's infrastructure. And here's what most people miss. NVIDIA doesn't just make chips, it controls the entire ecosystem. CUDA is the software, H100s are the hardware, and every major player from Microsoft to Meta depends on both. This year, it's already up 29%, and it hasn't even broken a sweat. They control 90% of the AI GPU market. AMD is still playing catch-up, and the demand, it's not slowing down. AI, automation, edge computing, it all runs through NVIDIA. They're not a tech company anymore, they're the power grid. And you see, most investors are late to stories like this. They wait until it's safe. That's how you miss the 5x opportunities. Then convince yourself you're early after a 2% dip. I don't play that game. I buy the kingmaker and I stay in the game. Why Robinhood is the most misunderstood stock on the market. Robinhood is up 209% this year. Most people still think it's a trading app. That's why they missed it. This isn't 2021. Robinhood isn't a brokerage anymore. It's a full-stack financial platform with banking, credit, retirement, crypto, and AI-driven advisory baked in. They just posted $386 million in profit and are printing 56% EBITDA margins. That's not a turnaround, that's an empire. But here's what almost nobody sees. They're going global. With the Bitstamp acquisition, Robinhood picked up 50+ active licenses across Europe and Asia. That means instant access to 30+ new countries. While legacy platforms like Interactive Brokers are still clunky and overpriced, Robinhood's rolling in with a clean user interface, commission-free trades, and better technology. That's going to accelerate adoption. This is how market share gets stolen in real time. While analysts are still arguing over payment for order flow, Robinhood is stacking users, launching new products, and expanding internationally, all at once. And Wall Street is still catching up. So if you think you missed the move, you didn't. The US story already played out. The global one is just getting started. That's why I'm not trimming, I'm adding. Next up, why SCHG is the unsung hero of my portfolio. SCHG doesn't make headlines, it just keeps making money. It's up 14% year to date, and most people don't even know what it is. The Schwab US Large Cap Growth ETF gives me exposure to some of the best companies in the market, Apple, Microsoft, Amazon, without betting on a single winner. It's like owning a portfolio of giants all wrapped into one position, and with a 0.04% expense ratio, I'm not getting robbed on fees. This is how I build the base of my account. It's not about excitement, it's about exposure. SCHG is loaded with the sectors I already believe in: technology, healthcare, consumer services, and I get all of it with zero maintenance. I don't need to outsmart the market, I just need to stay in long enough to let this ETF do the hard work. You don't need to hit home runs every week. You need consistent pressure over time. SCHG delivers that. It's not flashy, it's foundational, and that's why it stays in my core portfolio. Next up, let's cover the QQQM and why it's a conservative bet that still packs a punch. If you want to play tech without picking stocks, this is how you do it. The QQQM gives me exposure to the top 100 non-financial companies on the NASDAQ, all in one shot. Apple, NVIDIA, Amazon, Meta, Microsoft, it's a murderer's row of dominance. It's up 17% this year, and the expense ratio is dirt cheap, lower than the triple Q, same exposure, better for long-term holds. I treat this like the quiet sniper in my portfolio. It doesn't move wild like individual names, but it delivers consistent results with way less drama. That's a win. Now, let's address the obvious. Yes, there's overlap with SCHG, and that's on purpose. SCHG gives me broad exposure to large cap growth across multiple sectors. The triple QM is focused, tech heavy, high velocity. One gives me a growth foundation, the other gives me a sector edge. I don't want either, I want both. That's how you stay aggressive without getting reckless. Most people try to avoid overlap. I build with it because overlap is only a problem when you don't know why you're holding something. I know exactly why the triple QM is in my portfolio, and it's not going anywhere. Why Meta isn't done dominating AI and advertising. Meta's up 24% this year, and most investors still don't understand how dangerous this company is. They're not just Facebook. They're three of the most powerful platforms on the planet. Instagram owns Gen Z. Facebook prints ad revenue and dominates the over 30 crowd. WhatsApp is the default communication app for half the world. That's reach across every age group, every continent, and every screen. Now, take that distribution and stack AI on top. Llama is getting plugged into everything. Personalized feeds, smarter messaging, automated commerce, and every data point gets recycled to improve the next touch point. That's not social media. That's full loop monetization at scale. They're not waiting for permission. They're funding it with a 28% free cash flow machine. That's Meta. They have the traffic, the data, the infrastructure, and the cash to run laps around competitors. They're building chips, scaling AI, releasing open source models, all while raking in billions per quarter. I don't care what people think of the brand. I care what it produces. And Meta is a cash machine fueled by data, scaled by AI, and wrapped in platforms the world already uses every single day. That's why I'm holding and looking to buy more. And now my favorite, why Palantir is the power move most investors still don't understand. Everyone sees Palantir. Almost nobody understands it. They look at the stock, I look at the entire business. Palantir isn't building apps. They're running defense systems, supply chains, energy grids, and global intelligence platforms. This is the software that runs critical infrastructure, and once it's in, it never comes out. You don't trial Palantir, you integrate it, then you expand it. How many contracts have you heard them lose? Exactly, 0. That's not market share, that's a stranglehold. Their platforms don't get replaced. They get deeper, longer, and stickier. It's why customers keep writing 8-figure checks without blinking. Oh, and while everyone else is burning cash chasing growth, Palantir is printing money, free cash flow, 49.7%. Read that again. That's not good, that's elite. That's fuel for scale, hiring, research and development, and acquisition. They're not just surviving, they're arming up. Do you still think it's just a meme stock? Come at me. I've been holding through the volatility while everyone else flipped their positions and chased trends. You don't get rich playing hot potato. You get rich holding the picks no one has the patience for until the payoff slaps the market in the face. This is also my largest position. And here's what people are missing. Palantir doesn't need rate cuts to win. They're stacking cash no matter what the Fed does. But as interest rates come down, private companies get more aggressive. Budgets open up, projects get greenlit, and Palantir's commercial business is built to capture that surge. Lower rates don't change the story, they accelerate it. Palantir isn't hype. Palantir isn't hype, it's infrastructure. Either you're early or you're going to pay more later. I already made my choice. Now let's quickly talk about why I stopped selling covered calls and why it mattered. Last year, I was pulling in 5 figures a week running covered calls. Every Friday, cash hit my account. It was consistent, predictable, and easy. But here's what changed. I stopped selling them on my biggest positions, not because I forgot how, but because the game changed. We're in a trade war with China. Tensions are high, headlines are everywhere. But when that ends, and it will, the market could rip. The last thing I want is to cap my upside on stocks like NVIDIA and Palantir just before they go vertical. Covered calls would have clipped my gains, and I'd be sitting here watching from the sidelines while someone else cashes in. Here's what actually happened. I stayed long, no caps, no covered calls. In the last 6 months, NVIDIA is up 60%, Palantir is up 97%. You know what covered calls would have done? Taken those gains and cut them in half. That's the price of playing it safe, and I wasn't willing to pay it. I miss the premiums, but I don't miss the regret. I miss the premiums, but I don't miss the regret. There's a time to collect rent and a time to let the monster run. This year, I chose upside, and my account is up over $2.2 million with a quarter still left to go. The people who played it safe, they're still talking about income. I'm looking at returns they didn't even think were possible. Knowing when not to sell is just as valuable as knowing how. That's the difference between smart strategies and wealth building decisions. You need to take control of your financial future, so let me ask you something. Who else is showing you the trades that built a $2.26 million return this year while still in the market building positions with real skin in the game? Who else is breaking down NVIDIA's pricing power, Palantir's 49.7% free cash flow, and the reason I didn't cap my gains with covered calls while sending alerts the second I move? Nobody. That's why my portfolio isn't doing well. It's outperforming. And this isn't a flex, it's a challenge, because if you're still watching from the sidelines, ask yourself, what are you waiting for? Inside my Patreon, you get real-time trade alerts. No lag, no fluff, just the exact moves I'm making and why. High-level breakdowns, what I'm seeing, what matters, and what's noise. The strategy that took me from $1 million in 2024 to over $2.2 million year-to-date in 2025, and the most focused investing community on the internet I've ever seen. Don't take my word for it. Stephen locked 90% gains and freed up capital to redeploy faster. To the moon crossed $500,000 Swiss francs, over 650,000 US dollars, and said it best, I have benefited a lot from this community. This isn't luck, it's execution. And the only difference between them and the guy still thinking about it is action. My Patreon is just $30 a month. People blow that on coffee, snacks, or some app they forgot to cancel. This could change your trajectory. This could change your life, or at the very least, sharpen your strategy, tighten your execution, and keep you from making dumb mistakes. Try it. If it doesn't deliver, cancel anytime. Zero pressure. But if you're still watching this channel, taking notes and telling yourself, I probably should join, then let me be clear. This is the moment. Stop watching, start building, because you can scroll or you can scale. But either way, don't say you weren't told.